it doesn't.
What is up, Long Beach? It's the Real Estate Coach, and it's time for another segment of Keeping It Real Estate on the beach. Joining me in the booth, as usual, the mortgage mistress, Lisa Alvarez.
Hello.
REO Frank Cazares from Caldwell Banker. How you doing, Frank?
Hey, now.
And the Dean of Home Ownership University, Scotty Shang. What's happening, everybody?
Doing excellent.
All right. Hey, we got a great show for you guys today. We're going to have a lot of fun towards the end of the show with our segment Rockin' Realtors. We've got Austin Bach and a couple of his band members. They're setting up in another studio ready to rock for us. And then we'll have a few words with them at the end. We got some fantastic topics for you today. I got some guests in the booth to talk about this stuff. Let's get started, as we always do, with a rate update. What's going on with the mortgage rates, Elisa?
Mortgage rates, we're looking good. Again, we're still looking good. FHA 30-year, 4.125. 15-year, we got 4%. Conventional, we're at 4.25. 15-year, 3.875. And H.A.R.P down payment assistance program is still at 3.25.
Last week was crazy.
It was.
Though. Last week was one of those examples. Remember how we were talking about locking rates?
Yeah, the 20-second rule?
Rates, yeah. Oh, it was probably about 10 seconds last week.
I shot out an email to all the realtors saying, hey, if you've got clients who haven't locked yet, definitely lock by, and I told them Tuesday. Because I was expecting some action on Wednesday.
What was funny is 4.25 on a national average on a 30-year fixed is up a little bit. It was 4.17, but it came down to 4.25. Rates went way up and then came way down
yesterday,
and then just landed. Yeah, yesterday at the end. Yesterday they came down and landed just a little bit above. They're just a little bit above what they were, but they shot up and then they shot down.
I mean, here's what's happening. Well, here's what's happening. We have a lot of stuff going on in Europe. We all know about this, Italy, Greece. And so what we are expecting, we do.
What is it?
Well, they're in debt.
It's an olive
They're having
shortage.
issues.
They are.
You know that problem that we were having a couple of years ago here in the States? Well, Europe's having it now.
It's not an olive shortage?
No. No, thank God. So what we're seeing is Wednesday, Europe was going to announce some sort of, programs to help these, indebted countries. And that's what we're expecting. If it was good news, interest rates were going to go up. And we didn't see too much as what we were expecting, but Thursday they certainly did. And then they dropped again yesterday because they weren't feeling that support that Europe was giving was going to be strong enough. So that's when confidence started dipping again.
And what's funny is Wall Street's always several days ahead of the market.
Yes.
So so what's happening with the rates is the anticipation of the news that's coming out later the week.
Right.
Wall Street's a little busy. They've been occupied lately.
They have been.
They've been occupied.
No pun.
No pun intended. Okay. So rates went crazy, came back, slight tick up as the bottom line.
Yes.
Slight tick up in rates. Okay. Anybody stupid enough to lock in a rate when it was at its highest yesterday? Or?
No, we didn't when it was dropping.
I want to look in the rate. Hey, our topic today is all over the news.
It's
all
a good
over
one.
The news. HARP and the changes that it's made, and it's going to save the world. It's going to save the United States economy. So I'm going to put it over to my mortgage experts here and tell me how the heck is HARP going to save the world?
I don't know about save the world, but I think for the first time as a government program, they addressed some of the things that I think were key in the reason why the other programs failed. So there's a couple of things that they did. The most important thing they did is they're not going to have as much risk and liability on lenders for originating these loans, the reps and warrants. That's key. That's key.
That's huge.
Because the reason why none of those other programs worked is because lenders refused to participate because there was too high of risk.
Right.
Why would they ever put their neck out there if they're taking 100% of the risk and the liability if something should go wrong, especially with like these refi or with the modification programs? Because an overwhelming majority of those modifications defaulted later.
Right.
So the government says, here's the guidelines. We think this is a great idea. Now you guys go take all the risk.
Right.
They took that out.
And who's going to do that? Banks aren't going to do that.
No.
They just lost a whole bunch
Why
of...
not? Banks love us. Banks are good people.
So do you think that what is the difference between their former attempt and their present attempt? Because I remember talking to some pretty high-level bankers 5-6 months ago when they were giving more opportunity for modification and so forth. And they would tell me that, they're posting it everywhere. They're marketing. They're pushing it. They're making a big hoopla about it. But really, Frank, about 80% of the people that are going to apply still don't qualify.
And here's the biggest disqualification factor that happened was the cap of 125% loan to value. So that meant that as a homeowner, you weren't allowed to be any more than 25%, more than 25% than what your value was worth.
And they removed that cap.
And they removed, which is, to me, the second biggest thing outside of
California.
liability.
That's huge.
Well, isn't the big component here? Correct me if I'm wrong, but part of this is also, I guess, the appraisal. And how you're handling
that's
appraisal.
No longer
that's key right there,
right?
The
appraisal is another big part of it. Now they're allowing automated appraisals, so you don't have to
AVM'S.
go out. An AVM, automated valuation model.
Mm-hmm.
So,
So they do they not care about the current appraised value now, and they're waiving it or accepting it, or
if the AVM is available, they're not requiring that appraisal.
Okay.
Yeah, but I mean, basic. Was that 2 minutes, or you throwing out
the peace sign?
Yeah, that was a sign.
You boomers.
Here's the important thing. Here's the important thing to remember about
what you're doing.
Important thing
Don't
about
fight.
Important thing about HARP is they just announced that they're going to make changes, and those were proposed. We have no idea what's going to happen. At the very, very earliest this will be available is December 1st.
Right.
But chances are
lenders aren't going to be ready.
We're not going to know what the guidelines actually are until probably mid or late November.
So we're going to keep talking about HARP. We're going to harp on HARP.
We're going to be harping on
But let's. I want to go over who would qualify, because that's going to be key. One, you want to. Okay, well, I can do it in 1 minute.
That's why you done missed
First step, you want to find out whether or not your mortgage is backed by either Fannie or Freddie Mae. You can go onto homeownershipuniversity.com. We have a really simple tool that you can look that up. Second, you need to make sure that your mortgage was sold to Fannie or Freddie before May 31st of 2009. Okay. Third, you got to be current. You can't have any late payments in 6 months. You can only have one late payment, right, in the last year. And the third, your LTV has to be at least 80% or over.
And you have to be left-handed.
LTV meaning
right.
Oh no, the left-handed thing's not.
And be able to jump up and down and tap your belly.
And a lot of these people out there, who I hear are trying to modify for whatever reason, they're being given advice. Oh, we need you to be in true distress, missing a payment. So I mean, that's kind of sad right there that they've gone in that direction, and now
I was a little upset when this came out.
That's a whole nother segment.
They're hosed on HARP.
Yeah.
Don't even ask for my opinion on this one.
I'm not going to ask because we're out of time for the segment, so thank God. The mistress would have been going off. Okay, so we're going to be harping on this subject for the next few weeks and helping people out to understand. Yeah, well, we're witty here. We're keeping it witty on Keeping It Real Estate. Hey, if you need any more information and you're listening and you wanted a little bit more about HARP, you can always contact the show by sending us an email at keepingitrealestateonthebeach@gmail.com. You can hit us up on Facebook, facebook.com/keepingitrealestateonthebeach, or you can leave us a voicemail at 562-888-BEACH, 562-888-BEACH, and we'll get your information in. Maybe we can turn it into a topic or at least a question in the mailbag coming up later in the show.